All right, hey there. Welcome everybody. Chris Franks with Texas West Capital. It is just after 11 a.m. Central Standard Time here on, what is it? Friday, the 23rd of July, 2021, in beautiful Bernie, Texas, which just happens to be overcast. It seems like I say that just about every time. It has been a wet summer so far. And again, we definitely can't complain about that. We've got so many lakes and rivers and whatnot around here. A lot of water sports, but can't do it without the water, right? We've been in this stupid, this stupid drought for so long. Just emptying out the lakes. But anyway, so good to have all this rain and everything. Hopefully you guys are doing well there. Hey there, Bill, Oscar. Good to see you guys. Telluride is here. Data's here as well. Let's see here. Yeah, man, Bill, the glasses are working well. I just got to remember to use them. Or I just got to convince myself to use them, I guess I should say. Excuse me there. But yeah, they work pretty well. It's just weird with them. So anyway, hey there, Wazobia. Good to see you. Hey guys, don't forget, you can still join us over here at howtotrade2win.com. I just added the link right there, as well as the code 50% off Tier 3, where you can get 50% off the current 6-month or 12-month Tier 3 membership. This will, we're going to go ahead and end this August 1st, guys. So we're coming up there about a week away. So if you've ever wanted to join in, if you've ever really wanted to learn how to trade, I'm telling you, it's your last chance to do it on the cheap, man. You can think that you can do it yourself, and you can, with the information online. But I tell you what, you're going to spend a lot of more money in what you're going to lose trying to differentiate between the good information and the bad out there than what you will with us. So we'd love to have you there. Over 100 hours of video education, 3 live streams a week for Tier 3. Mondays is Wyckoff. Wednesdays is tips, tricks, and techniques. Gives you rule-based strategies and deeper discussions about things. And then Thursday, of course, we do Elliott Wave. As a matter of fact, yesterday we just went over the Elliott Wave features of Motive Wave. If you guys haven't tried out Motive Wave, I'll tell you what, let me do this real quick for you. If you're just using TradingView, you might want to try this. We've got a 14-day on that link right there. You've got a 14-day free trial with Motive Wave. Check them out. If you've been using TV for a while now and you find it maybe a bit limiting, you don't have as much, power as you'd like to have, the ability to really kind of go in there and tweak things a bit, give Motive Wave a shot, man. Check it out. They've got a sale going on through Monday. So you can get a 14-day free trial, and if you decide by Monday that this is something that maybe you want to do, you can get 25% off a purchase, 25% off if you just outright buy it. If you buy it in payments, you can get 25% off each payment, or if you just lease it, you can get 25% off as long as you remain, as long as you're continually leasing it. So if you lease it for the next 3 years, if you continue month after month, you'll get 25% off every month through that time. So it's really great, man. It's really powerful. You got order flow. You've got Elliott Wave. By the way, make sure that you understand what you're getting when you do that, because they do have different packages available. And even with Elliott Wave, they have the Elliott Wave Lite, and then they have the Elliott Wave, I think they call it Ultimate. And the Ultimate, I believe, is the one that has the scanner. You can scan the markets for wave 2s, wave 3s, wave 4s, wave 5s, wave E's of triangles. It'll do all that scanning for you and let you know what the probability is that it's correct and whatnot. So, among other things, lots of really cool stuff there. But, it's free to try it, guys. You should definitely try it. Hey there, TV Canal. What's up, man? Good to see you. So anyway, howtotrade2win.com. That's how you can get a hold of us there. You've got the link there for Motive Wave. Check it out, guys. It's what I use. I do TV with you guys here and with Discord because it makes it easy to share. Plus, I get access, to all the different coins and whatever for charting. But the power comes in Motive Wave or Sierra charts. Motive Wave's that good in between those two. So anyway, what's going on, man? So we had this great short-term, day-long or so accumulation range down here, which broke out really well. Stair-step reaccumulation along the way. Currently, we're sitting in this, what I believe is going to be a larger reaccumulation range here. As you can see already, volume is dropping off. So kind of like what we had back here. you've got the same thing happening here. So you've got your volume dropping off within the range, which is what you're looking for. And so I think we've got Elliott Wave wise, I think we ended with an ending diagonal here. We're dropping down more. So I think we're going to have this wave 2 coming down here toward the range lows. It might break down and dip below for a spring and then up. But remember, it can always stop prior to that as a last point of support. If it does, I think it's probably going to stop right here around the S1. So either it's going to bounce off that S1 and head up, or it's going to come on down here and drop right below the swing low here, maybe hit the S2 and then bounce up. Either way, this should be wave. I've got wave 2 here. You can go look at a wave A or wave, this wave A or wave 1, and then wave 2 or wave B. Let's see here. Continuation up there. We need to see this drop below this swing low, this wave 4 swing low, to kind of confirm that it's done here. That's $32,051.88. I say that because there's a possibility that maybe this is actually ABC is 1, and then 2, and then, ABC is 1, then 2, and then ABC is 3, and then 4, and maybe an ABC 5 up here to this yellow range. Up here at 33,087 to 33,327 kind of area there. So wave 5 may be done here, but it's got to drop below this wave 4 to kind of confirm that. As long as it bounces prior to that, it heads up above here, then we're looking for one more move up here, and then the breakdown. Either case, coming down here probably toward that 38.2, and then that'll give us, let's see here, if we're coming off that, from where we are right now, that would give us potentially 35,105. That's our first target, because if this is an A and a B, then we look for wave C to equal wave A initially. And that's 35,105. Excuse me. But if this is a 1, 2, and we've got a 3, then we're looking up here at 37,346. As long as it continues coming down from where it's at right there. So, I mean, it's been a beautiful setup coming down here. You can see how Elliott Wave and Wyckoff kind of work together real well. Adding more and more Wyckoff to what we're doing once again, like I used to. Let me see here. So yeah, so I mean that's kind of what we're looking at right now. Let me see here. You shorted Bitcoin for the 32.5 and you hit your stop loss at 32,902. Did you short from here and then it hit it up here? Yeah, I had this last little bit of a bump right here. Yeah, I can see that. That kind of sucks. It is what it is, right? But it does kind of suck when that happens. But that's why, proper risk management, it's no more than 1% of your portfolio, and you're more than fine if that's the case. If you're doing it for more than that, then it sucks really. It can suck really bad. Let me see here. Bianca, good morning. Good to see you there. Who else is here? Diego, what's up, buddy? Man, Diego really jumping in with his Elliott Wave lately. Diego's with us over there at TWC. Man, I love seeing it. I love seeing that. TV Canal says bearish divergence on the 1 hour and 4 hour. This is the 15-minute. What do we got here? Yeah, you had this right here as you made that slightly higher high there. Kind of had this 4 hour. 4 hours at local. Oh, yeah, right here at the very top. Looks like. Yeah, a little bit. Your daily here, we're breaking up into overbought here. As we pointed out, we had this hidden bullish divergence right here, which led to this breakout that printed this nice bullish engulfing candle. But we haven't had any follow through yet. So remember, bullish engulfing is pause. It means pause until you get some confirmation that it's continuing higher, which is another bullish candle coming out after it. So right now it could just be a pause right there. There's so many possibilities right now, guys. Depending on how you read this. Again, 3 and then ABC, and 1, 2, 3, 4, 5 would give you a flat here for 4. Bottom would be in, then you'd have a 1, and then a flat correction here too. So A, B, C. So 1, 2, and you'd be going up. Other possibilities are this ended as a ending diagonal. So 1, 2, 3, 4, 5 is what we've looked at. In that case, 1, 2, 3, 4, 5 gives us potentially just A done here. And then this is a and then A, B, C for B. And we'll get a little bit further up here for C to finish wave B. So you'll have A, you'll have B, and then you have C further down. There's just different possibilities here depending. And if it bothers you that somebody's not guaranteeing you which way it's going to go here, get out of the market, guys. I see that so much. And usually when it bothers people, these are people who have no clue what they're doing, and they've just got into this, and they want to get rich overnight. And they talk to people like myself who've been doing this for a few decades now, which guess what, guys? You can't do it that long if you're not doing something right. But then they get on you and they start, calling you names and all this silly little, 3-year-old stuff, those little temper tantrums. I'm telling you guys, if that's you, get out of the dang market. You're just going to lose all your money. And me telling you that right now is probably going to upset you. It's probably going to piss you off. And you know what? I don't care. That's on you. I'm trying to help you out. If you can't get over that mental hurdle, if you can't get over that idea that you can't be guaranteed what's going to happen with price, if you cannot get beyond that, you need to be out of the market. You have no business being in the market. All you're going to do is give up all your money. And then you're sitting there right now arguing with me in your head going, or probably yelling at your monitor, go, oh, you're such an idiot. You'll probably type it here in a minute. And I'm not. You though are showing that you may be by thinking that. Guys, the idea is if you're here, you're supposed to be learning something. If your mind's so closed, if you're a new trader, and by new trader, I mean you have not been consistently profitable for years. If that is you, and you're over here arguing with me about the realities of trading, you have no business being in the market. You're just going to lose your money. And as much as it irritates me when people act like that with me, more so, I hate the idea that you're going to be in the market losing your money. I don't want anybody here losing their money. And you go, oh, but Chris, it's a zero-sum game, right? Somebody has to lose in order for you to win, right? Wrong. If you are trading and you make money and you exit with a profit and somebody else gets in and rides it further, you both won. You did not lose by getting out. You made money. If you have a system with good, proper risk management and you entered and it hits your stop loss, yes, you lost a few bucks, but you didn't lose. You followed your system. If your system is correct, you're fine. You're going to lose some along the way, but that doesn't mean you're losing. These are such simple concepts that people seem to have so much trouble understanding. But we're trying to, week after week, 2 streams a week here. I'm trying to change that. We'll see if it works. People can be pretty dang stubborn. Let me see here. Who else is here? Boris, what's up, buddy? Boris has been with us a little bit here. I love seeing him show up for those weekly, I guess multi-times a week live streams there that we have for Tier 3. Cue the action. What's going on there? What do I think? Is it a fake or really start a reversal? I don't know. That nobody knows. I'm going to tell you right now, guys. Nobody knows. For sure. We all have ideas. We have possibilities. For me, the easiest way for me, it makes no sense to say it's definitely a reversal or I think it's really a reversal or not. For me, it makes more sense to watch your levels and you either add into your position as it continues proving you're right, or you just trade that smaller time frame and, you're done when you're done. I mean, why would you guys got to think about this. Why would you try and do what somebody else is saying they think is going to happen as far as, whether they think it's a reversal? I mean, this is a big idea. Is it a reversal or not? Why would you put so much trust in somebody, even somebody like myself who's been doing this for so long, telling you what we think? It doesn't matter what we think. The market does not move based on what we think. The market moves based on what the market does. So watch the shorter term targets. Trade those. And like I said, if you think it may be a reversal, you start with a smaller position and add to it as it gets through those levels. There's no reason to go all in. See, that's the problem. You guys are often thinking how big, you want to get that very lowest price and go all in. And then you think, you'll be able to ride it all the way up. But that's why you're losing money in the first place. Don't do that, okay? In this area right here, remember, we have been going sideways really since back here in January, beginning of the year, 7 months now. This is sideways. Yes, it's a large range from 28.66 to 64.7 or whatever. Yeah, it's a large range. But this is all sideways. We have sideways here. We have sideways up here. We have sideways here, which is, again, just sideways back in this area. So all in all, this is one big range right here. Until we're breaking out of that range definitively, impulsively down, impulsively up, it's still a toss-up. It can be either one. There's no reason to get all, worried about whether it definitely is or definitely isn't. So yeah, you guys definitely think about what I'm telling you here, guys, because nobody else out there is going to tell you this stuff. Why? Because they're more interested in selling you. They make their money off what they're selling you. And they're more interested in just saying the right words to tick all those boxes for you so that you buy, so that you go, oh, look, I'm thinking correctly. Look, this other person says so. So I'm going to buy their stuff. I've never done that. I won't ever do that, guys. I'm more interested in you learning correctly than, out there just trying to get a few bucks from you. Okay? Even if it drops below 30K, it doesn't have to be really bad. Again, there's multiple things going on. For instance, if this is A down here, right? If this ends up here and we got 1, 2, 3, 4, 5 here and we're done, and we're doing A, B, C here for B, then even dropping down, we're probably looking at this 23,000 area here. That's probably all we're looking at. It could go down here to, this 17 to 19,000 area, but, I don't know. Is that really bad compared to the fact of what we've already dropped? I don't know. Maybe you could say it is, but 23 I don't think is really bad from where we're at right there. It's not even a third on the drop, 30% or so. So, it doesn't mean that we have to definitely break. Now, can we break down a lot further? Sure we can. But it doesn't necessarily have to be. And that's my point there. Yeah. Hey there, WhiteR21. Good to see you. Boris says, your honesty never upsets me. I cherish it to the full. I'm glad, man. I'm glad. Because that's the way it should be, guys. I don't... Again, we all come in when we first start the markets thinking the same way. There's nothing special about us. We all think the same things. And so the good thing is that means we can forgive ourselves for the mistakes we're making and we can move on. If you can't move on from your mistakes that you've made and the losses that you've taken by thinking the wrong way, you'll never be able to make money in the markets, guys. So just understand you're not special coming in thinking what you're thinking, which means you can forgive yourself. That's the good thing. You don't want to be special in that way. You can forgive yourself. You can move on. You can make a choice to learn. Sadly, as much as I sit up here over the last 3 years now doing this, not many people have making the choice to learn. I've seen a lot of people who have come and gone. I've seen a lot of people who have continued to lose money over the last 3 years and continue to argue with me about it. It's silliness, guys. It's silliness. If you know the very, very basics of how your car works and your mechanic says it looks like you need, a new cylinder, are you really going to argue with them and say, no, I don't. No, I don't. I mean, really? If you go to your doctor and your doctor says, well, looks like you got cancer. Are you really just going to sit there and go, no, I don't? I mean, yeah, you're going to go get a second opinion, sure. But you're not going to be silly and say, no, I don't. Just to argue with them, right? Because you think you know what you're talking about. It's the same way with this, guys. Just because you don't have to go to school to get a degree to do this, or just because you don't have to be somebody special in some government thing or monetary-wise, you have a certain level of finance or wealth position, it doesn't mean that it makes you any more knowledgeable about this. You guys got to be careful out there because everybody else out there they're going to do it, guys. They're going to tell you what you want to hear because then you'll buy from them. And they make their money. They don't make their money trading. They make their money off what you're buying from them. Don't be that person that helps them do that, okay? Man, I hope I'm making this clear. I don't know why I feel the need to do this morning, but I don't know. Maybe it's just all the comments, and messages I've gotten here lately. But it seems like there's this whole group of new traders right now that are really stuck in their own heads. They can't get out of their own way. And I think it's because the market, is very unclear for them. and they want it to turn around so very badly. And, you know, it's understandable. But, man, oh, man, you're just kind of really setting yourself up to hurt pretty bad. Now, big picture here, if we're looking here at the daily, the first thought is, you know, you want to get to the pivot. After that, the target is this R1 pivot area, okay? If this is wave B, it's most likely, I think, going to end up here around the R1 pivot. That's what I've been talking about. Now, it can continue to go higher here. You know, 61.8, I think, is right here around the R2. So it can continue to go higher. But I would expect that if it's wave B, I don't expect it to go back up into this distribution up here. I expect it to kind of top out here at the top of this range, okay? So if it does push out above that, I'm going to start looking at it really strongly and going, well, maybe this is the bottom here, and this is a 1-2 as a flat correction, and we're heading up off that. But we're still going to have levels to get through, guys, and things to, you know, things that we need to get through. Obviously, if it gets rejected here at the pivot and drops below this swing low right here at 29,301 and 56 cents, you know, that's going to confirm further downside. Or even if it breaks up here to the R1 or even the R2 and it comes back down below that level. When it breaks down below that level, that says, okay, this is probably A, B, and then C going down probably. But as long as it stays above this swing low right here, your eyes should be higher for that. Let me catch up with you guys here. Got a Mark. What's going on? Thank you about the glasses. I appreciate that. Thank you. Kerouac, what's up, buddy? Man, 2 times this week? 2 times? Oh, man. It's lots of stuff for you to catch up for, buddy. You're going to have to get there watching it all over in Discord. Let me see here. See, and then we have like Lawrence here who is screaming at the top of his head. It's like I can see him on the other end of the computer there just freaking out going, Bitcoin's crashing now. It's going back down again. Stay away from people that do that. They're clearly very emotional. And I'm going to tell you right now, guys, if you want to be successful in trading, there is no room for your emotions in it. Your emotions are what's going to lose you money. Because you're going to let people like that get you all fired up and worried and concerned and do things you may not have planned to do initially. Because, again, of the emotion. So just be careful out there. Let me see here. Onyx King, what's up, buddy? You on vacation in Greece? Man, don't be tuning in to us, man. Go enjoy your vacation. I'll be here when you're done. You know that. Hey there, Chris Baker. Good to see you. Devin as well. Andrew checking in. Let me see here. Rasta, what's up, buddy? Good to see you checking in. Boris says nothing like a good old mistake and learning from it. Yeah, you know, and we're human beings, guys. Most of the time, that's how we learn, right? It's the same thing I teach my 10-year-old son, you know. Even at my age, I'm going to make mistakes. You know, and I tell him that making mistakes is a part of life. It's a part of growing. It's a part of learning. And it's not a bad thing unless you don't learn from it. As long as you make it a point to learn from your mistakes, it's all good at the end of the day. It's when you're refusing to learn from those mistakes that you put yourself in a really bad situation. So again, it becomes with the bullheadedness and this idea that, you know, when you're in trading, you know what you're doing even though you've never done it before. Or maybe you've been doing it maybe you've been adding money to the machine for the last year or two and you think that you're a pro trader now, yet you're losing consistently. That's not a pro trader, guys. If you're losing consistently, you know, over the course of a year or two, you're still a new trader. You're still brand new because you haven't figured out what you need to figure out. And sometimes it takes a little bit, guys. Sometimes some people, they pick it up just like that real quick. Other times, man, it takes 8 months, a year, 2 years, whatever. I went in here my first 5 years. That sucked. Almost 5 years, yeah, about that. And then I finally decided, man, I need to learn what's going on. But I was bullheaded, thick-headed, all that time. But, you know, eventually, hopefully, you get to the point where you go, well, you know what, I'm tired of being stupid. I want to learn what's going on. Like I said, it took me a few years there to get to that point. But I was young anyway. You know, when I started, I was, 18 when I first started. So, you know, it is what it is, right? I just knew I didn't ever want to work for anybody else. And then after a few years of doing this and having to work for somebody else, I was like, man, this sucks. I really don't want to work for anybody else. Had to figure it out. Yeah, no, I stay away from the negativity stuff on social media. You know me, I got thick skin. I'll be honest with you guys. The people come out there and they say things, like they probably do to you if you say something out there. There's always some idiot who wasn't held enough as a kid or something, wants that attention, acts like they're 3 years old, and they'll just say the worst things possible. I just, you know what? If it bothers you guys, just take a step back and just remind yourself, you have no clue who this person is. They have no clue who you are. And obviously, they're not doing anything with their lives if they've got the time to come out there and bash you so publicly like that and try and shame you and stuff like that. It's just, why even concern yourself with somebody like that? You guys are better than that, okay? So don't worry about it. Don't worry about it. People spend too much time online now, dealing with all this negative stuff that's on there. It's a cesspool, guys. There are a few good things that happen online, but for the most part, social media is a cesspool. It brings out the worst in people. And they think that they're getting this attention. Like I said, like they're 3 years old, right? So they think this attention is good. And in fact, it's people like us that are sitting there just shaking our heads, feeling sorry for them. I mean, like really feeling sorry for them. Man, I don't know about you, but I don't want anybody feeling sorry for me like that. That's ridiculous. Let me see here. Samir Salvatore, I'm sorry, I don't mean to butcher your name there, says the thing I have been struggling with lately is that even if I do the analysis and the price does pretty much do what I expect it to most of the time, you still struggle with myself. I still chase the price rather than wait for it. Any suggestions I can take it under control? You know what? I'm going to be honest with you. All these things I say, they don't happen overnight. They don't happen immediately. They take time. They take practice. It's like anything else you do in life. You have to condition yourself. It's really, yeah. I mean, I don't know that there's really anything you can do other than just try and practice that way. Wait for price to pull back. Sometimes it won't. Most of the time, price will pull back. If it's a real breakout, most of the time, price will pull back to that previous resistance, retest it as support, and then move on. Not every time though, but you have to get it over in your head. I know a lot of traders, when I tell them that, they're like, "Oh, but I'm going to miss those times when it goes up." Well, yeah, but that's only a few times. You're going to lose a lot more times if you chase the breakout immediately, because so often it'll be a fake breakout and a pullback, or you don't have the right resistance drawn on there. And, again, it'll just catch you there, a bull trap or a bear trap, and go the other way. One thing that we do, again, for our Tier 3 members, every Wednesday we have our Tips, Tricks, and Techniques segment. I do an hour-long stream with them, and I teach them rules-based systems, a whole bunch of different rules-based systems. We've done this for over a year now. That's quite a few systems there. But they give you rules on when to enter. So I think maybe something like that, if you can learn things like that, that'll help, because it doesn't make you feel like you have to get the breakout. If it breaks out, if your strategy is to wait for it to pull back on a breakout, and it does that, okay, you're golden, right? But if it continues up and doesn't pull back, that's where you guys freak out. You don't want to miss that, right? So these rule-based systems give you ways to enter that breakout after it's happened. So then you don't have to concern yourself with missing it. You can play the breakout by waiting for it to pull back and then go. And if instead it's one of those few times where it actually breaks out and continues without pulling back, you can use one of these rules-based system strategies to get into that trend as it's going. And I think that might help, because then you don't feel like you're missing out. Your impatience is emotional. It's based in emotion. You're scared you're going to miss it if it goes up, and you're going to miss out on this easy money, right? I believe that's probably what's going on with you. And it's most traders. That's the way it is. It's hard when you don't know what you're doing, and you don't have that experience of being in the market for years and understanding how price action moves. You don't want to miss out on the big moves. And, especially with Bitcoin, we've been conditioned, where it pops up $1,000 or $2,000 at a time, sometimes, and you don't want to miss that, right? But guys, the reality of trading is you're going to miss those a lot. You have to understand you're going to. You can't get into this idea that you're going to be able to get them all the time. or even most of the time. So yeah. It puzzles you to see the NASDAQ breaking all-time highs, Dow and SPY near the all-time high while crypto market ranges. Well, yeah, but look at how high and fast, crypto ran during that time when they went up. Yeah, they went up well, but nowhere near as well as Bitcoin, right? We're talking about from 3,500 to 65,000, in a year. So that's what, 20 times? Almost 20 times? 18 times? And they didn't do that. So, remember, it's not that Bitcoin is correlated with the NASDAQ and all that. They're just all reacting to what's going on with the dollar. But depending on who's involved and how the money flows, some of them are going to, get there quicker. Some are going to get there slower. They won't be all at the exact same time. So, yeah. Let me see here. It looks so terrible when we do that. Let's get down here a little bit. Yeah, well, it looks like we're breaking down here below wave 4 here. So I think this should be A, B, and we're going to get a C down here. Let me put on that 15-minute again. What do we got here? Looks like 1, 2, 3, 4, 5. So 1, 2, probably 3, 4. Probably still got 5 to go. We might not make it down here to 38.2. We might only make it. Let me see here. Yeah, I think we've either got a 1, 2, 3 or a 1, 2, 3. Let me see here. If this is 1. Yeah, see, that's the 1618 exactly. So we would probably look for a reversal around the S1 pivot on the 15-minute here. We might only get an LPS here instead of a spring, which would just be in line with everything else here. No spring down here at the bottom, LPSs. Stepping stone reaccumulation, LPS. Stepping stone reaccumulation, LPS. Last point of support there. So I think we might just end up getting that. Potentially, oops. Potentially in this kind of area here. What you're going to want to look out for right now is a breakout above wave B. This would be wave B here. So if I'm doing this, I've got an A, I've got a B, and I've got a C here. And so that's what we're going to look at in this area down here. And so generally what you want to look for when that happens is you want to look for a breakout above wave B. Now, there's, again, that wave 5 would technically end right about, this 31,870, 31,890 kind of area. But it can waterfall down further than wave 3 here and get to this 38.2, dip right below, give you a spring, large volume. But right now, we'll see if it bounces off this S1 area and then breaks out above that that wave B there. Let me see. The other thing you can probably do if you're a little bit more risk tolerant, not as risk adverse, you can probably look for a breakout here of this descending resistance. So if you get an impulsive breakout above the 15-minute pivot, impulsive means expanding volume, expanding candle spread, and above this descending channel resistance, that'll get you in. That'll mean it's probably going to go ahead and break out above wave B. You better do that. Now, the other thought here, guys, is that, remember, we're looking at this right here as a wave 2, and it's kind of pretty short here, just hitting the 23.6 retracement. So it's possible you get an ABC down, ABC up, and then 5 back down. So you can get your own type of flat correction here as well. So you just want to keep that in mind. If it's just because it breaks out above wave B here, doesn't mean it's necessarily going for wave 3. Again, it could just be ABC down for A, ABC up for B, and it should terminate around this swing high up here, and then 5 more waves down toward the swing low here, or even 38.2, and it finishes off that flat correction there. If you're in Discord, of course, if that's happening, guys. I'll update y'all on that. But yeah, so, that's where you might want to watch. We've got good volume here. We've got RSI bouncing above oversold. I would have rather have seen it get in oversold if this is wave 2 finish. But the 15-minute Stoke RSI did bounce off oversold down here at the bottom. Oversold. It's crossing bullishly. So again, We'll look for a rejection here and a fall down maybe toward that S1 pivot. But if we are breaking out of here, just be aware it could just be wave A, and then we've got wave B still to go. Something like this. And you'll have wave C, it'll end here, or it'll end here. And then it'll finish off, and then we'll head back up. In terms of Wyckoff here, as you can see, we've got the preliminary supply up here. You've got your buying climax. I've got this as reaccumulation, so I've got this as your local selling climax here, which would mean that we'd be moving up here, and you'd have your automatic rally up here, and this is all potentially still part of wave B. So even if you drop down here and move up and then drop down, that would still be wave B here. The drop down below would signal phase B here. The drop down below the swing low here at the bottom of the range would be your spring. So that would be, phase C. Phase D would be your markup interior, and then phase E would be your exterior markup. Remember, the further this goes on before it breaks out and continues up, the higher it's going to go when it does break out. This right here is phase B. This is what we call building a cause right here. Wyckoff's law there of cause and effect. The larger this cause, the larger phase C plays out here, the larger the effect when it breaks out. So that's what we're kind of looking at there. Let me see here. Some here, yeah, you say you're pretty new to the entire space. I struggle to keep my emotions in check, and I see it going the other way even when my stop loss isn't hit. I still get out, then I see that it hits target. Yeah, Samir. That's what I mean, man. The first thing you need to learn, honestly, is proper risk management. That is the most important thing you're ever going to do as a trader. It's where you make your money. I preach that every day. If you use proper risk management, then you're not so emotional about moves. You can allow price to hit your stop loss because it's a very, very small loss overall. Usually when we get in, we don't know risk management. We're taking large positions, and that's why we get out before the stop loss is hit because we're seeing all this money that we're losing, and stuff like that. Being emotional, it's part of it, man. It's the beginning. We're human beings. We're all emotional because we're human beings. But the important thing is to understand that and then kind of work beyond it. You have to. It's nothing that comes easy. It's nothing that comes intuitively. It takes practice. It really does. But yeah, so, it's just one of those things you have to work through, which is why we concentrate on that and so much else along that same lines there in TWC, because it's the reminder until you're getting used to it yourself. It's that reminder about emotions and whatnot. Let me see here. Andrew says it looks and feels that we're in the denial phase of the Bitcoin cycle. Could these cycles be faster than before to complete or zoom out? Maybe a bear trap? You'd have to let me know where you're looking at in terms of your time frames on that, so I could answer that question better. You say zoom out, but I'm not sure how far you mean. And bear trap, I'm not sure where you mean as far as a bear trap. Do you mean I don't even know where to begin with that. But yeah, a lot of people are going to pontificate right now upon where we are within cycles and whatever. And that's what I was talking about at the beginning. You're going to waste your time if you guys are doing that. Right now, while there's no clear evidence which way price is going to go overall, if it's just going to finish a correction here and then head down further, or if the bottom's in, the best thing to do is to zoom in a little bit more and play these shorter term time frames. Like I said, if you think this is the bottom down here, well, on this pullback here, you can, if you haven't added in already, you can start with a small position. And as you get above, the one, if you get up here to the 1.618, well, that'll be your wave 3, and it'll pull back for wave 4. And after it completes wave 4, you can add more to your position. Excuse me. And then it'll do wave 5, and then it'll pull back for a wave 2. And if it does that and it confirms that wave 2, then you can add more to your position. So you're kind of building your position as price is moving, so you don't miss out on that very bottom if it is the reversal. But that takes a little planning ahead of time. But that'll definitely help out a bit with that. And that way you're not so worried about whether things are or aren't one way or the other, what's going on in the bigger time frame. Because again, guys, look, I've been doing this for a very long time, and I can't guarantee you that we're done here or not. I can't guarantee you that. Let me kind of put this where I can see this on different time frames here. And so, you know, if I've been doing this for, 25 plus years now, and I can't guarantee you which way it's going to go, it's not because I don't know what I'm doing. It's not because, I'm not any good. It's because I know enough to know that you don't know for sure what's going on there at the moment. But again, that's often the hardest thing for new traders coming, because they just want somebody to tell them that they're right and everything's going to be okay and they're going to make tons and tons of money. But again, for most traders, that isn't the way it is, because they're thinking that way to begin with. Just trying to see what we have here as far as this goes. Yeah, we've got this line coming off that resistance there. We're kind of messing around with here a little bit, but this could still be just a this could actually be the top here that we're looking at, something like that, for the breakout of that, which sends it up higher. So yeah, again, guys, and it's not that you can't do it. You definitely can. You definitely can get to this point. You definitely can learn how to trade correctly, but it starts with being humble, with understanding that you don't know what's going on, and then with a real belief, that you want to learn what's going on and you're going to do what it takes to learn what's going on. As long as you can do those two things, most of you will be just perfectly fine. Sometimes you need a little bit extra help, but for the most part, you should be just fine, getting there, as long as you're doing those things. But it's, most people continue to lose money in there because they don't recognize that they're being silly. They don't recognize that they are, that they're doing these things, that they're being egoistic instead of being, or egotistic instead of being humble. They don't understand that they're crushing their own progress by not accepting that they don't know what's going on and doing more, learning more. Yeah. So, a lot of what we do, guys, not just in trading, but in life, it's because of us. It's because of our emotions and our inability many times to be humble. And I think a lot of times this online, especially if you find this stress that like Samir's talking about here, definitely understandable. And if you find that you're feeling that a lot, I'm willing to bet that you probably spend a lot of time on social media, which it exasperates all these things that you're feeling. It makes them even worse. Because all of a sudden it looks like everybody knows what they're doing, which, believe it or not, most of those people that you're following online, they're not really trading anyway. You see them all the time. They get caught, photoshopping their returns and all this kind of stuff. It's just stupid stuff. Man, you follow me, when I make a bad trading decision, I talk about it. Because for me, it's more important that you learn from that and you understand why that trade didn't necessarily work out. So when you come to that potential same scenario at some point, you can think back and go, oh yeah, this happened to Chris back here and this is what happened, so I need to be extra careful. I need to watch out for this. I don't want to sit there and lie to you and go, oh yeah, look, I made all this money, blah, blah, blah. I don't have to. And you don't learn anything from that. As a matter of fact, you might end up losing a lot more money because of me, and I'm not interested in that. I'm interested in doing what I can to help you guys out here, honestly. With what you're looking at and with what's going on in the markets and the way they usually work. My gosh, with so much information out there, people are still talking about the fact that the Fed's printing all this money. They think, oh, it's all this money that the Fed's printing. Look at that M2 money supply rising up there, man. Hyperinflation tomorrow kind of thing. And it is the worst kind of worst that I've heard here, guys. Do me a favor, join here at TX West Capital. That's my Twitter here. TX West Capital. I posted a link to an interview I just saw yesterday. Let me see here. Where did it go? I just did this. Right here. This one right here. Dr. Lacey Hunt. He's the, as it says here, the chief economist over there at Hoisington Investment Management. And he basically, he just goes over the same things really that I've been going over for the last couple of years now. About 26 minutes into it or so, 24 minutes into it, he starts talking about, he mentions the fact that, we've had 9 years here of really just stagnant corporate growth. You've got a few that have made a lot more money, but it's just really overall corporate revenue and growth or whatever has been, just pretty flat for the last 9 years, the secular bull market. But yet the stock market is just going to these crazy new highs, and the disconnect with that and what that actually means. He discusses a little bit about the current rip in inflation that we're feeling and why that's there. Again, the same things that I've talked about really, but maybe you'll get more out of listening to him talk about it. He's a very smart guy, very, very smart guy. But it's a good interview. It's about 30 minutes long. So I would definitely suggest you guys check it out there and just give it a listen. And really pay attention, because there's just so much misinformation, and most of it's not people trying to lie to you. Most of it's because they think they know what they're talking about. And to me, that's the more dangerous of the two. You can be a lot more convincing if you believe the nonsense that you spew. I know, what a way to put it, right? But yeah, so anyway, I would suggest you guys really kind of take a look at that and kind of see what's going on with that, because, my goal here is, again, just trying to get you guys to understand that most of what you're hearing online and social media really isn't legitimate. But even though it's parroted by people like, Pomp. I think I just saw a tweet of his here today where he was talking about, what is he talking about? I think he was just talking about that, the Fed and what they're printing and everything. And this is a guy who's made a lot of money, right? And you think, he's made all this money, so he must know what they're doing, right? And unfortunately, it's not. He's at least not as far as that goes. And so, see, it tells you that you can be successful even if you don't know, right? Let me see if I can find that real quick. The particular thing I'm talking about here. And I don't have anything against Pomp himself. I just, he's a businessman, guys, and he has to get you to, I don't know. I think part of it maybe believes it, but part of it is just that he makes a lot of money with this Bitcoin investment stuff, right? And so he needs to have that narrative so people continue to put money into his digital crypto fund thing that he's got going on there, right? Let me see here. Here it is. Got it right here. Here we go. Right here. The U.S. created trillions of dollars in fiscal and monetary stimulus. Gold is down 4% in the last 12 months. Gold has failed as a safe haven from the insane environment we currently live in. But his thing here is all about the idea that we've printed all this money. But he doesn't understand how that money is printed and where it's going and why it doesn't equal what he's trying to get you to think it equals, which is what most people online talk about. So, again, guys, the idea should you don't have to just believe me here, but you should be open-minded enough to pay attention and, to want to at least listen to it and figure out what may be going on with that. All right. Let me kind of catch up with you guys. Sorry there. Let me kind of catch up with you here. Vasilis, what's going on? He says, what if it continues dropping below 31.5 and we don't get any reversal? How would you count that? Yeah, so that's the same thing we've talked about before. Let me kind of come in here. The idea with that would basically be, let me kind of turn off all this here so you can see this a little bit better. The idea with all that, because it's still very much a likelihood right now. I've got this, I'm counting this up here. I'm trying to count this as potentially an A, and then a B as a flat correction, and then a C up here, and then we'll have further downside. So basically this would be 1, 2, 3, 4, 5 here, and then A, B, C for B, and then 5 up for C, which should probably target this area up here, this wave 4 area up here. And then we go down, and if that's the case, I think we're probably headed to around 24,000. That would be my expected target. If we continue below that, then we're looking at that 17 to 19 range. If we continue below that, then we'll talk about it some more because we'll have to see how those waves are playing out there. But that's the way I would look at it. Just basically one, 5 waves down being done. And then, of course, working on the wave, for wave A, working on wave B here, and then we'd have wave C coming down. Yeah. Let me see here. USDCAD, man, I'll tell you what. I like USDCAD. Made so much stupid money off that over the last almost 2 months now. This is what we've got looking at here. So this morning, we've got all this overlap. We've got kind of like this crazy move down here. I think it's possible that we've got an A here and a B here, and then we've got a 1, 2, 3, 4, 5 for our C. As long as this holds right now, that's a possibility. Now, this right here, I was looking at maybe like a 1, and then a 2, and then a 3, and a 4, and a 5 here, coming up here. I guess it's possible. Let me see here. It's possible that we've got, instead of a 1, 2, 3, 4, 5 here, that maybe we've got an ABC. So it finished off this this leading diagonal here. And then this is wave 2 on the pullback. That's possible. We need to see a breakout above wave. What I've got here is wave 3 to kind of see how that's working. It's just there's all this silly overlap, which makes it a little bit difficult to count all that. Right here, I mean, this is 1, 2, 3, 4, 5. So I know we've got 1 there. And then it looks like we've got maybe ABC is 1, 2, ABC is 3, 4, ABC is 5. So then we've got A, B, C here for 2. And then it's just this next part that really starts getting kind of, when you're looking at it there. If we zoom out to the 1 hour, you look here, again, you can go 1, 2, 3, 4, potentially 5 right here. So that could be an A, and this could be a B, and this could be a C here. So that could give you that 5 is done right there. And if 5 is done right there, then right now we've just got, let's see here. That would be a wave 1 is, like I said, a leaving diagonal. Now, the other thought, real quick here before I go into this, is this could just be wave A or wave 1. There could be some big reversal, some macro reversal up here instead. And so this would be a leading diagonal of 1 or A. But even if this is A here, we'll get the B on the pullback, and we'll get the C up here toward this R1 pivot, this high volume node up here around this 1.2677 area. And so if we look at that, from where I was talking about, I made a comment yesterday. I think we're probably somewhere right around this area. And I was talking about, 120 to 130. And I was looking at it getting up here into this area. Is what I was looking for, if we can get the breakout of what we had going on there. So I'd still kind of look at it, even if this is 1 here and this is 2. Let's see. Depending on how far we pull back, do we continue to pull back to 38.2 here, or the 50 even? Or, I'm sorry, the 50 or the 61.8 even. My first target would be that 1.26 area, 1.2648, but that's really in the middle of nothing. You're most likely heading up to this area of breakdown up here. This sharp drop, usually when you get the breakout there, it's a sharp move back up to the area of breakdown. So you're kind of looking at this area up here, this 1.27 to down here around 1.2676 kind of area. So that's where I'm looking right now with my position initially. But again, if we get up here toward this 1.26987, and then we're only pulling back, say, 38.2 on that. So right down here around 1.264. And then we're breaking out again. Well, all of a sudden that's a 1, 2, a 1, 2, 3, 4, 5, heading up here toward, up here toward this swing high area. And so, if we're 5 up there, I mean, we're 3 back and we're 5 more up at least. And then that takes us back above this swing high. And at that point, the idea that this is a 1-2, I think gains a lot of traction at that point. But right now, still keeping an eye on the possibility that maybe there's some larger macro reversal here. But the only way that works is if oil continues to run up. And if oil continues to run up and then the dollar, continues to drop. But, the dollar's not looking droppish. I mean, if we zoom out of here, the dollar... Here we go. Let me take off all these counts here. I mean, this is a nice potential Adam and Eve kind of double bottom here. A breakout above this swing high should confirm it. That's 93.437. And then you've got that target based on the height of it up here at 97.626. My count coming down has this as a 4 right here. So a breakout for me above 94.742 should all but confirm that the bottom's probably in. But, again, we're still kind of sitting below this first breakout area here. And so, it's possible. I mean, if I look at this, I go, okay, 1, 2, 1, 2, 1, 2, 3, 4, 1, 2, 3, 4, 5. So maybe we've got a 1, 2, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, kind of heading up as it does that right here. But this looks sort of ending diagonalish here. And so if this is an ending diagonal of some degree here, after it finishes, we'd probably be looking for a pullback at least toward the 92.1 or 91.55, depending on where that ending diagonal actually starts. Is this 3-4 ending diagonal here, or is this 3-4 ending diagonal here? But right now, I mean, we've moved in sideways between the pivot and the R1. We continue rallying up toward the R1. If we get that rejection there again, we should just test the lower bounds of this area here around the pivot, which it may not be there when it does, and then head up. So, it's hard for me to be too bearish on the DXY at the moment. I'm very open to the idea that, this could be 3 and this could be 4 playing out, and then we got 5 still to go. But right now, DXY is making a case for further upside. And if you're watching bonds are acting all crazy. Same thing. If you're watching the reverse repo, we're consistently getting that $1 trillion area. And if you understand how money flows from banks, and the government and everything, then you understand, why that's likely happening. I mean, if banks are flush with cash, that's the reverse repo. They're settling for this small bit of return they can get overnight from the government with the reverse repo rather than loaning it out. Why aren't banks loaning out money? Banks aren't loaning out money because they're scared. They're scared of what's going on. They do not feel safe in the environment. Everybody else is talking about how, everything's great. We're going to have the next 10 years. It's 1921 all over again, they say. We're going to have the next 10 years of just awesomeness. I don't think so. I think it's 1929. And so I think the banks are thinking potentially something similar as well, which is why they aren't loaning. And you say, but the Fed's printing all this money. Well, who cares? The Fed's printing all this money that's going nowhere. The money's going to the primary dealers, which then take that money and they buy treasuries, and then the government goes back to buying treasury from them, and the money stays there. It's not entering the broader economy. So all it's doing is affecting asset prices, which is the goal. The goal is to have asset prices increasing and to get you thinking the economy's going well and to get you out there spending money, because the Fed can't make the economy do anything. They have to convince you to spend all this money and do all this stuff. That's how it works. The inflation that you guys often talk about when you talk about, the Fed's printing all this money, is actually what happens at the bank level. When the bank makes new loans, when the bank loans money to you or to some company. And we continue to look at the Fed site, right? The St. Louis Fed. We see what's going on. We see that the banks are loaning less and less. We know if you're out there trying to get loans, that the requirements are increasing. Now, they're not decreasing. They're not loosening. The banks are making it more difficult for you to get a loan. The banks don't want to loan that money. And as long as they're not loaning that money, there is no real, inflation the way you're thinking about it. There's this temporary spike that's going on. But, I think that inflationary, what they call it inflation, it's just price rising. Prices don't inflate. They rise or they fall. The money supply inflates or deflates, okay? It grows or it shrinks. And it shrinks when you're paying back your loans, which we know people have been doing over the last year plus in record droves. We know there's a disinflationary, at least, if not deflationary effect by money sitting in savings. We know that the savings rates just astronomical levels in the U.S. It hit the highest savings rate ever back there in May of last year, a few months after the sharp drop there in March, right? And since then, it's remained very, very elevated. So as long as money's sitting in the bank and not rotating and churning throughout the economy, it has a disinflationary, at the least, effect. But then you combine that with the fact that banks are not lending out more money, and all of a sudden you're getting this greater deflationary effect. And you go, well, then why are prices rising for the stuff that I'm buying, Chris? And you know what I'm going to say? I'm going to say probably, as far as I'm looking at it, bottlenecks. Production, bottlenecks, shipping, bottlenecks. We had all this stuff come to a halt about a year ago, and it's still trying to get going. There's still bottlenecks. There's still people are out there buying more and more. And as a matter of fact, I believe, if I remember right, Dr. Hunt there was talking about that as well in that video. That you're getting you're getting these rising price effects from the fact that stuff is not, that you can't get it. For instance, I don't drink coffee, but for whatever reason in law school, I started drinking this Java Monster Kona blend. If y'all drink that, you know what I'm talking about. You can't find it anywhere. I haven't been able to find it for a month now. Same idea. Chip shortages. Same idea. Chip shortages affect everything. Vehicles, computers, whatever. They have chips in it. We've got this chip shortage going on. If you're trying to get an Xbox Series X or a PlayStation 5, you're having a lot of trouble finding it, right? Because they don't have all the chips that they need to continue to, to produce it like they want to. So that's where you're getting this rise in prices. It's from the production and shipping bottlenecks and whatever. Not from the fact that the Fed's printing, money over there. And by the way, even if it were, and you think, oh God, the U.S. is going to go into hyperinflation, guess what? The ECB is talking about adding another $1 trillion to their QE. I've shown you the charts before. The ECB is way ahead of the U.S. in money printing, right? So even if you thought the U.S. was heading to hyperinflation, ECB should hit first. The euro should hyperinflate first because it's so much worse off. But it's not going to. Neither is the U.S. because it's not money entering the system like you're thinking. Hey there, Dib. I'll call you Dib there from Brazil. You know what? I've got a link here with some books. Oh gosh, what is it? I think it's still there on Amazon right now. Let me see if I can find that list here real quick for you. And I've got some books. If you want to read books, these are the books I would suggest. I'm going to put that link in there for you. Right there. And that's just a list of books that I've read or out of the books that I've read that I think are really helpful depending on what you want to learn. Whether it's options or candlesticks or deflation or options, contractive cycles, K cycles, social cycles, socioeconomic theory of finance, fourth turning, stuff like that. Elliott Wave, Wyckoff books there, Trades About to Happen, How I Trade, and what is that called? How I Trade and Invest in Stocks and Bonds. That's another Wyckoff book there. Stock Market Techniques 1 and 2, more Wyckoff books in there as well. Options, Futures, Other Derivatives is actually more of a textbook, but it's good stuff. I've even got an anthropology book in there called The Collapse of Complex Societies. It'll really help you because at the end of the day, guys, markets are not about numbers. Markets are about people. And if nobody's told you that, listen up. Because everything that happens on here has nothing to do with the numbers. It has everything to do with how people perceive what's going on in the world and locally. It is that human emotion going from fear and greed in the aggregate over the large group of people. And then you have people trying to make money off that. That's what this is. So, again, this is why if you're chasing news events, you're always behind. You're always chasing. You need to be positioned before the news events. And that comes from understanding how these cycles work. And they're all based, again, on human interaction. So, yeah, you can check out that link right there. And, there's a whole list of books in there. We get a very, very tiny kickback if you buy something off that. So don't think, oh my gosh, I'm not going to do it because they're going to make all this money for them. I just do it there because it's easier to keep a direct link to those books with the ISBNs and whatever on them for you guys. So, yeah. Let me see here. Darren, what's up? He said, did you see that the Federal Reserve economic data is now available on TradingView? Well, yeah, it's been there. I think they only had like a very limited resource. Now I think they're up to like 1,092 of those out of like 4,000 or 5,000 that Fred has available. So yeah, if you guys want to find Fred data on there, you can come up here to, let me see. Let me see if I can find my other chart here real quick. Oh, we'll talk about this in a minute. But if you go up here, oops, nope. Let me get a third window in here. Oh, sorry. Give me just a moment here, guys. I'll get this for you here since Darren brought it up. But if you want to go, if you go Fred. Oh, gosh, not Fred. What is it? It's under economy right here. If you go to economy right here, all this Fred, remember I was just talking about the Fred data a minute ago. This Fred is the done by the St. Louis Fed. And so like you can go here to money stock, initial claims, corporate profits after tax, blah, 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 personal income, employees total non-farm payroll, personal savings rate. You can click on that. Look at that savings rate on the daily here. Look at how it's risen from back here in August of 75 to where we're at now. All-time highs in savings here in the U.S. Again, if people are keeping their money in the bank rather than using it, spending it, and churning, that's a disinflationary, like I said, at least, if not potentially deflationary effect. We're at those highest personal saving rate level ever. Let me see here. There's just so much other information here that you guys can check out. Monetary base, personal consumption expenditures, all that stuff. Personal savings rates. I said that already. Overnight reverse purchase agreements. So that's your reverse repo right there. You can pull that in. Look at how high this has gotten. Look at this. Nearing $1 trillion. Look at this. No other time. This data goes all the way back here to, what is that, 2003 here? Almost 20 years. It spiked right here in January of 17, right before the, right back here in 18. You see how it went up here and then it dropped down into 18 here, which is where the great financial crisis went in. And then it went across, and you had this spike here right after March of 2020 when we had that drop back. And look at this. This is huge. Again, if banks, the reverse repo, the banks are trading cash for overnight, for securities, and they're getting a small bit of rent on that. They're getting a small bit of interest on that overnight. Money market rates are just crap right now. And they're choosing not. They are making the decision not to loan out to you and me and businesses in general. And so you have to ask yourself, well, why aren't they? If they're flush with cash, which they are, because reverse repo just shows you right here. This is cash going to the government overnight, and they're getting, their U.S. Treasuries in return there, and they're, again, getting that little bit of rent on it. So they're flush with cash, but they're not rolling it. What's up? And the only thing that makes sense is that they're scared. They're scared of the economy. They don't want to be loaning out all this money and taking it on the chin, what people can't pay back. So, that's where we're kind of sitting with all that. Bianca, have a great day. Have a great weekend. Let me see here. You too, Bill. Hey there, Moogs. What's going on? It says someone on Twitter said the spring on Bitcoin was invalidated because it broke below 30,000. I think what they're looking at, if they're talking about that, I mean, I don't know what they're talking about exactly, but I think they're thinking maybe, I guess, I don't know which one they're talking about. Are they talking about this was a spring, or are they talking about this was a spring and it just dropped back down below and that redid it? If they're saying this was the spring, well, yeah, then, that's not a spring there because of this here. But if you're looking at this, in the grand scheme of things, you've got distribution up here, and you've got some sort of accumulation or reaccumulation or maybe redistribution happening in here as you had reaccumulation happening here. But this is, again, one large range here. If we look at it, I mean, if I'm looking at this, I'm probably saying, well, in the grand scheme of things here, this is probably a preliminary supply. And then you've got your buying climax, and then up thrust, and then up thrust after distribution. And then it drops back down here. But in this big thing here, this really just becomes the two parts of that larger range. So this becomes the distribution part. This may become the accumulation part of this overall range here. Right now, I've got this. I'm only interested really right now because the only thing we really know for sure is this area down here was reaccumulation. And then stepping stone reaccumulation, and I believe we've got reaccumulation forming here to head higher as well. A larger bit of reaccumulation here before we're heading up. But that's all we really know for sure. Otherwise, you're just zooming out here and going, okay, well, what's what out here? If I zoom out to the weekly, yeah, again, if I'm looking at the weekly here, I'm thinking, man, this looks like because if you're looking at this up here, this is your change of character right here. And so in this larger potential range here that I've talked about before, preliminary supply, buying climax, and this becomes your automatic reaction down here. Or because if it's not distribution, if this is reaccumulation, this just becomes, you've got your, this becomes reaccumulation after decline here. And so what that means is you've got a small distribution area that leads, then you've got this sharp drop here, this shakeout, which leads to this local selling climax, which gives you then this reaccumulation range that you get here, and then price may head up. But this big range here becomes, again, that reaccumulation after decline here is what I would think that might be. Again, you've got your spike of volume here at this area, and you'll get those either at the preliminary supply or at the buying climax. So right there suggests preliminary supply. Get another spike right here, which suggests this buying climax area. Then you've got this large volume right here on the drop, which suggests, again, this kind of what do you call it there? Local selling climax area, because then you have this range right here, and then this becomes a spring. This becomes a test of that spring. We should head up. If we look at the volume here, your local selling climax, huge volume. Your next drop down is your spring, which dropped right below it and shoved right back up. Another spike of volume, but much, much less. That's what you want to see. And then you ease on back down into these lower levels again on even less volume, which is, this is a test of this spring area because you have a spike of volume on that spring. So you need a test. That's that right there. So, I mean, if I'm looking at this right here on the weekly, I mean, to me, it suggests that's what's going on. We've got a reaccumulation after decline. So that's this big reaccumulation zone here. Small distribution comes down into this reaccumulation here. We've got a spring. We're getting a test. And if that's correct, then up here, pull back, up here, pull back, up here, pull back, keep going up like that is what should happen. But we don't know for sure. We don't know for sure. We have to see it overcome some of these levels to kind of confirm that. But right here, that's what that looks like to me. So hopefully that makes sense. Hopefully that makes sense for you. Ross Mark, what's going on? Good to see you checking in. What do I think about Tether minting billions without being backed by USD? I think it's all a bunch of nonsense. I've been outspoken against Tether for quite a while. Because, again, everybody plays it off because they don't want it to be true. They don't want the idea that if Tether goes bust, Bitcoin takes a huge hit. So, they've got all these reasons why that won't happen. It may or may not. I'm not convinced it won't, but at the same time, I think what Tether does is very bad for cryptocurrencies in general. Again, they lied to us, guys. I mean, you have to, if you let them get away with the lie, then what the heck are you doing? They lied. They said it was 100% backed by USD. And then we come to find out, as their latest report they had to give to the New York Attorney General there, we find out that very little of it's actually backed by cash. Much of what it has is backed by commercial paper. But they don't tell you who that commercial paper is from. And as I explained before when that first came out, there's various grades of commercial paper. And let's say they got commercial paper from Bitfinex. Well, that's basically crud paper. I mean, they're not saying, oh yeah, we've got commercial paper from Apple or something huge like that, which would be, good. Good companies to have paper from, but they don't tell you. And I would think if it was something good, they're going to know people are going to say these same things I'm saying. And you would think that if it was good paper, if it was really good quality paper, something that you shouldn't have to worry about too much, they'd tell you. Because then they could sit back there and just kind of, we're good. You don't have to worry about it. But they're not. They just say, yeah, well, most of that's paper. And so commercial paper. And that can become a huge problem, depending on where they got that commercial paper from and how that business is doing. So I think there's a lot of potential for some really cruddy stuff to happen. But is it going to or not? I don't know. I'm not worried about it either way. Just deal with it. I've made more than enough in crypto so far. You can never make enough, right? But to not be worried if it goes to zero tomorrow. It is what it is, But hopefully it wouldn't. I've got a lot of hope for Bitcoin and crypto, at least up to, those nice high six figures would be nice. Just so I can kind of cement the personal islands I'd like to buy. But, if it does, it does. It is what it is. I'm not overexposed in crypto in any way. So making good money off it while it moves. But still, really preferring Forex to everything else. Am I buying now? Yeah, I buy a little bit pretty much every day. Good to see you checking in again as always there, Black Man's Guide to Bitcoin. I've got a little bit that goes in every day. And then we get kickbacks on some things. There's very little things, guys, that I actually tell y'all, like we talk about Femex, we talk about Motive Wave, we talk about Elliott Wave International, and then some books on Amazon. I mean, really, that's about as far as we go. I've been approached by a lot of iffy-ish looking companies, and I can't do it. If I don't feel comfortable with the company, there's no way I'm going to push them, right? I'm not going to talk to you about them. And I always go in and try them out first. I always make sure, that they're good. So like for Elliott Wave International, I've pretty much tried all of their services just to see how it is. Education's great over there. Their updates for the different things, the crypto, the stocks, overseas, interest rates, all that kind of stuff, generally pretty good. We don't always agree, me and them, but it's okay. The information's good for the most part. You just have to be aware of what you're watching on that. But I think Elliott Wave International is great with the education side of it for sure. And I'll be honest with you, I've got the membership to their socioeconomic thing that they do, and that's really great. I enjoy that a lot. I think I paid something like, I don't know, I think it was like $500 or whatever for the year, something like that. But that was great stuff there, but just because I'm that type of nerd, right? So, I mean, we look at all these things, and we don't really talk about a whole lot other than that. But, I get, we always let you know when we're getting you know, if it says ad, we're probably getting something from it. But I would never push anything that I haven't actually tried out myself. Like I said, I own Motive Wave platform, the full bells and whistles, everything. God, I don't know. I think it was like 2,500 or $3,000 or something. But yeah, I use that. So, you know, sometimes we'll get paid a little bit in crypto, like very small bit, and that always goes into continually buying more Bitcoin as well. So yeah, I've always got money going into Bitcoin one way or another. Yeah. And it's a daily basis, by the way. Sorry if I didn't make that clear. It is daily. Let me see here. Can I check Sol USDT? Let me see here. We've got an update here from just the other day, as a matter of fact. What does this look like? That's what I'm looking at the moment. Potentially something like that. We've got bullish engulfing. This is the daily. We've got almost a hammer candle there, bouncing off the S1 pivot. Bottomed out and oversold with Stoch RSI there. Nothing, no kind of divergence going on here or anything. Actually, yeah, there is. Wait. No, there's not. Yeah, there is. See, I can't even tell here. We've got lower lows here at the oscillator on the daily with RSI. Get this off the other time frames. And then we've got higher lows right here. So it's hidden bullish divergence, which is continuation of the bullish trend. So we should look for it to head up here. Looking for a breakout of descending channel resistance here right around the daily pivot. So if we can get an impulsive breakout above that daily pivot, that should give us a pattern target here of $37.38.6 above the point of breakout. Likely to take it up to around the R3 daily pivot. In terms of waves here, it looks like we've got 1, 2, 3, 4, 5 gives us 1. We've got 2. 3 has a minimum target there of 51.402, which gives us a larger degree wave 3 minimum target up there of 58.351. And then we've got this larger wave through this 1, 2, 3 here, which actually has a minimum target of 112.305. That'll probably rise depending on what's going on here. It looks like I got this 1, 2, 1, 2. So this will probably end up being larger, but it's at least 112.305. The only thing that changes this is if we drop down below this wave 2 right here at $22.10. That'll invalidate that local count. If we drop below this wave 2 at $20.18.7, that'll invalidate all of this. And if we drop below this wave 2 over here at $19.11.7, that'll invalidate all of this. And it'll say that wave 2 is still in progress here. And if that's the case, I think maybe we'd look at this as an A, and then maybe this is an A, B, C, D, E, in which case I would expect it to get rejected here at the pivot and drop down below. So this would be an A, that would be a B, and then we'd have a C, and then C would be looking to target, let's see here, wrong one. Would be looking to target probably, let me see here. Yeah, let's go with the triangle height here. Yeah, right down here around this this $8.30 kind of level. $8 to $8.50 kind of area, I think. If this ends up being an A with a triangle for a B and then a C down. So as long as we break out above this and head up above wave 1 here, that should add a lot of confidence to what's going on with the count, what I have planned here. But again, if it rejects prior to that wave 1 swing high, then this is probably A, B, C, D, E as a triangle. We'll look for a breakdown below this swing low to confirm it. And then we'll look for that target down there. So yeah. Digital Mining Solutions, what's up, buddy? He says, I'm always putting money into Bitcoin too. 300 terahertz per second at the time. I think that's the THS terahertz per second, right? Oh, man. Yeah. You know, I mean, because the way I see it, guys, you know, anything can happen with Bitcoin. But I'm putting in money that, if I lose, it's not going to kill me or anything. And that way, if things are going as I expect they are and things will continue to do great and we're going to hit 6 or maybe even 7 figures at some point, I've got this great continual add in, right? If it doesn't, I'll get out before it's completely lost. And, I'll still end up with a profit over all my entries right now. So for me, it's really a win-win either way. I'd like to see it continue up and do well because I got a lot of plans and they're expensive. And that would help me get there pretty quick. But, if it's not, it's not. It is what it is. But that's what you guys should be looking at as well. You shouldn't be putting in more money than you can afford to lose. Because if again, the last thing you want to do is to have something happen. Don't listen. God, these people like Pomp and everybody, they go out there like, oh, look, last 10 years, look at how great it's been to invest in Bitcoin. As if that's a reason why you should get in for the next 10 years. They're literally saying, listen, this happened last 10 years and you're an idiot if you don't get in now because you're going to have something similar for the next 10 years. But that isn't how it works, guys. Bitcoin's only been around in this secular bull market that we've had. If we go into this huge recession, potentially a depression thing that I've been talking about, there's not a lot of upside for Bitcoin anytime soon. People are not going to put money into a risky asset like Bitcoin when everything's dying around them. They're not going to waste their money and take the chance that they're going to lose what little money they have. They might lose their jobs. They're not going to do that. If you guys are going to argue with me, if you don't understand that, you need to sit back and get out of the market and think about it. If we go into a recession or, heaven forbid, even a depression, a lot of jobs are going to go away. So people are going to put their money, they're not going to put it into some risky asset. They're going to hold on to that money just in case. Just in case. And you'd be silly not to do it yourself. The last thing you want to do is to get caught with no job, no money. Right? You guys, and for most of y'all, you're young. You haven't lived through any real recessions, any huge, at least anything that you can remember significantly. It's an awful thing. I was born in the 70s at the height, of what was going on back then. So, and since then, we've seen everything that's happened since then. 87, the 90s, 2000, dot-com bubble there, 2008, the GFC. And then we've had all this ridiculousness since then. So, yeah. Oh, Terahash. What did I say? I don't even remember what I said. That was close. Started with a T. Anyway, so yeah, I hope, guys, listen, I'm not here to make you feel bad. I'm not here to get you down or anything, but I'm here to bring reality to, because it's not usually what's out there in social media that you spend most of your time in. And so it's important that you have this reality check, that you have this reminder about what's going on, what may be happening or not. Because if you don't, you're just going to end up, getting caught. And why get caught if you don't have to? You can make money if the market goes up or down. You can make money. But you just have to understand when it may actually be going up or down. And if you don't know, you need to then not be betting on those larger time frames. You need to be looking at the smaller time frames and trading those on something that you can. Again, knowing whether this is going to break down here or not, we don't know for sure. I made a case here that says maybe a reaccumulation after decline here, right? Again, distribution goes into reaccumulation, heads up. But there's nothing here guaranteeing that that's correct yet. We're not breaking out above these levels that we need to kind of confirm what's going on here. And so if we're not, that means it could still go down further. So why place a trade based on this? Excuse me. What you should be doing is, as I mentioned already, be trading shorter time frames based on what happened here. This is a given. This was reaccumulation down here. Stepping stone reaccumulation coming up. Right now, you can wait for the breakout here, but this looks like it's going to be reaccumulation as well, so it gives you another long entry. Little take profit going on up here, more accumulation going. Price is kind of continually printing these higher lows and higher highs. as we're looking at 1, 2, 3, 4, maybe 4 is printing a triangle or something. 5 drops down toward the S1 pivot. That might be all you get. Again, similar to the rest of these. Just last points of support rather than springs. So you get it right here, and then it'll pop up. So then you're just looking for the breakout above this descending channel resistance as your first clue the bottom may be in. Continuing breakout above wave B here, it's going to add confidence to your account. And then you look for it to continue, up there toward a minimum of 35,105 and potentially up here around 37,346. But, anything can happen along the way. Anything can change. So, yeah, but you trade these smaller time frames because these larger time frames out here, aren't guaranteed. There's a lot of possibilities on here. Again, this could just be A, and we're doing B here, and we've got C still coming down. By the way, have you noticed here, this weekly pivot is right here around 21,000, right? So, and I said we're probably looking around that 23,000 area, it's just above it. So, again, it would make sense if we bounced off that and continued up. So that's our first kind of target area around that. But it could, drop a bit lower here into this weekly candle right here. See this right here? This one from December of 2020, December 7th, the week of that. That right there is that 17.5 to 19.5, that $2,000 range right there. So you could drop into that and pop up, or even just a little bit lower here into the candle 2 weeks before. So, again, if we're going to break down below the swing low here, I'm looking at this pivot area. And if we drop down below that, I'm looking at this kind of, candle area here. I'm kind of looking at the upper part here, but really it's still all within this larger candle from the week of 23rd of November, 2020. See, I can get out there. Now, if you lose that, well, now we're looking down here probably, again, like I said, the 12,000 level down there, S1 pivot on the weekly. And then you've got 9,000 down here at the high volume node. So, I mean, that's the way I'd be looking at it if it was to continue to drop on this larger time frame. But as long as on the shorter time frames we continue to make those higher highs and higher lows, for me, you're playing that upside until it proves you otherwise. Because, again, this could be the bottom here. Excuse me. Again, this could be 3. This could be A, B, 1, 2, 3, 4, 5 is C. But there's too many possibilities here that are too far from confirmations right now to say that it's definitely bottomed here or it's definitely going lower. I did have Bollinger Bands on here. Let me see. Let me throw those on here real quick. Yeah, so if you'll remember, when we were up here and I said if we lost this moving average here in the middle of the Bollinger Bands here on the weekly, I said if we lost that, we were going to come down to the Bollinger support down here at this area. Remember this 30,000 area? If you weren't following me then, I did say that. Anybody that's here that was there at that time can tell you. So, and that's where we are right here. So even with Bollinger Bands, it does show it now. Now, if you're playing Bollinger Bands here, you want to see the weekly reclaim this moving average here. You want to see it close above it, and then you want to see the next weekly confirm it by closing above that. And it doesn't guarantee it'll then go up higher, but it adds a lot of confidence if you're just using the Bollinger Bands here, what they're doing. So yeah, weekly Bollinger Bands, doing what they're supposed to do, right? So there you go, guys. Daily is squeezing pretty good here. Notice, bumping right up against that moving average right now. So again, if we can break through that, that should take us minimum up here. And then if we're breaking through here, remember, we generally work in threes, right? So when you break out, so you've got this where it condenses here, right? And it breaks out. There's 1, there's 2, there's 3. And we broke down here, right? And then we go 1, 2, 3. Lower lows breaking down below it. So if we can squeeze and break out above the top here, I'm going to expect to potentially see 3 moving up there before we get some sideways again. So just some other thoughts there with the Bollinger Bands, if that's your interest in how to do it. Again, same thing we're basically seeing with the pivots here. Impulsive breakout above the daily pivot. Not just that, but the swing high right above it here at 36,675. Expansion of volume, larger candle spreads as it breaks out above that area, closes out. I mean, that's a pretty good clue that we're potentially headed up here. Now, my only thing about that is we're nearing the end of the month. So these pivots are going to change at the end of the month. So to me, that would tell me, okay, we're probably, if this were to be like toward the beginning of the month, I would say if that happened, we're probably headed up the R3 or R5, at least. Because it's the end of the month, I think, if we do that, we'll at least hit the R1, maybe the R2, but we're going to have to see where those next monthly pivots go to do it. In this case, I think maybe it might move up here a bit more. So still potentially can follow that up. So, I mean, depending on how you want to trade it, if you're looking at your VPVR here, you're looking at remember, this just tells you how much volume was traded at different price levels within the time frame you have here on the screen. So this is your high volume node here. It works as resistance while you're under it. But once you get above it, it's support. You see how this was support here? And then it dropped down, then it becomes resistance. If we break out back above it again, it should become support again. And so if you're playing these, you would look to then break out up toward this area up here where this other node is. And if you get above that, you'd look for this node up here. And then you look at the swing high. So, however you want to look at these charts, I mean, all these different ways of trading, guys, they all get you to the same place. You just have to learn how to use them and then practice. The problem is most new traders don't want to spend the time associated with it. They want to get rich yesterday. They think they know what they're doing coming in, and the rest of us can go F ourselves, right? But, again, guys, don't think that you have to learn Elliott Wave or that you have to learn Wyckoff or that you have to learn pivots or whatever. Look at what really speaks to you. We all kind of look at the charts different ways, and some things make more sense than other things to us. Figure out what makes sense to you and then stick with it. You're going to get the same place everything else is going to take you if you do it right. All right? So there you go, guys. I'm going to get out of here. I just kind of want to leave you with that little bit there. I want to try and combat all the nonsense that's out there for you in social media where you have all these other half-baked, non-real traders out there kind of telling you things that sound like they make sense because as a new trader, you don't know what you don't know. And I want to help protect you from that nonsense, guys. So there you go. As I said at the beginning of the stream here, you can scroll back to that if you'd like to join us. Or actually, I think there's a link underneath the video as well. But you can join us over at howtotradetowin.com. You get 50% off the already discounted 6-month and 12-month Tier 3 memberships. And then, of course, that'll get you everything we do. Chart requests, chart critiques, 3 live streams a week. One is Wyckoff, the other is Elliott Wave, and the other one is tips, tricks, and techniques, which are rules-based strategies to trade. And really, I mean, that's that. Got over 100 hours of video education, guys. Probably close to 110, if not more now. But really, the people that are in there, most of our members have been with us for a few years now. And so I think that's what makes us a lot better place to be than the horror stories I've heard from some of y'all about other people that you've been with, other groups or companies that you've been with. They're very helpful. Everybody wants to kind of, because the way they see it is, if they help you and you become a better trader, then you help them just like they help you with finding potential trade opportunities out there. You got more eyes that know what they're doing, finding these opportunities, and that just helps everybody. So, yeah. Anyway, you guys have a great weekend. Thanks so much for checking in. I really appreciate you guys when you do. Hopefully, I'll see y'all over in Discord, but if not, I'll be back on Tuesday at 11 a.m. Central Standard Time, and we'll take a look some more, kind of check everything out. I did a lot more talking about, more macro stuff and things that traders should know this time than looking at charts. We looked at some of the more important ones there, but, maybe we'll look at the other charts next time more than talk about that stuff. Either way, the idea, guys, is just to help you out here. So you guys have a great weekend. Y'all trade safe. Remember to take some time to get away from the charts. It'll help all that stress that's in the back of your head. You'll feel better when you come back. Charts will look totally different. But other than that, just remember the only thing you control in the market is how much you lose. Right, guys? And don't forget, check out Motive Wave on that link I gave you at the beginning as well. You can get on my Twitter feed there. Like I said, 14 days free to check it out. You might decide it's amazing for you. You might decide you don't like it at all. But either way, it's free to check out, so try it out, all right? All right, everybody. I think that'll do it. Y'all have a great day. Take care. Trade safe.